I'm Matthew Galgani with your IBD 2-Minute Tip. 5 questions to help you do a profitable post-analysis. Successful athletes review game tape to improve their future performance. And as investors, we all need to do the same with our trades. If you want to make money in the stock market over the long term, you must do a regular post-analysis. Here are 5 questions to guide you. Number 1. Was the overall market in a confirmed uptrend when you bought the stock? History shows 3 or 4 stocks move in the same direction as the general market. To keep the odds in your favor, only buy when the Market Pulse in IBD's Big Picture column says Market in Confirmed Uptrend. Question number 2. Did the stock you bought have CanSlim traits? IBD's study of every top-performing stock since 1880 shows the biggest winners display 7 common characteristics just before they make their biggest moves. Those are known as the CanSlim traits. To find tomorrow's big winners, stay disciplined and picky, and look for stocks that have those same 7 characteristics right now. Don't settle for inferior companies. You'll find them in lists like the IBD 50 and Your Weekly Review. Question number 3. Was the stock near a proper buy point when you bought it? Finding stocks with great earnings and other fundamentals is just one part of the puzzle. You also have to understand that there is a right time and a wrong time to buy a stock. You can tell the difference by looking at a chart. In August 2011, OpenTable, which allows restaurants to take reservations online, reported that Q2 earnings had soared 120% and sales were up 53%. Those are good numbers, but it was a bad time to buy the stock. OpenTable was already trending down, and it kept going lower from there. Contrast that with Chipotle Mexican Grill. In September 2010, Chipotle was also posting good earnings and sales growth, and it was coming out of a proper buy point in a classic cup with handle pattern. That's the combination you want to see. It had CanSlim traits, was near a proper buy point, and when it broke out, the current outlook in the Market Pulse was Market in Confirmed Uptrend. From there, Chipotle rose over 180% in just 1.5 years. Now on to question number 4. Did you follow your sell rules? There are essentially 2 types of selling, and both are important. Defensive selling to cut your losses, and offensive selling to lock in your gains. The cardinal rule of defensive selling is this: if a stock drops 7 to 8% below what you paid for it, sell. No questions asked. Offensive selling, or knowing when to take your profits, can be a little trickier, but here's a good rule to follow. In most cases, lock in your gains when a stock rises 20 to 25% from a proper buy point. That's because after a stock climbs that much, it'll typically pull back and form a new base. So when reviewing your trades, if you find you're getting some good gains, but then giving much of it back, start applying this rule. It can help you lock in more of your profits. Question number 5. Did you weed out your laggards and focus your money on your winners? You want your stocks with the biggest percentage gains to also be your biggest positions. To do that, sell stocks that are not performing well and move that cash into stocks that are. And don't make the mistake of holding your losers while selling your winners. You don't build a great baseball team by trading away your best players and holding on to your bench warmers. And that's not how you build a great portfolio either. Use these 5 questions to review your trades at least once or twice a year. They'll help you identify and fix any bad habits so you can start generating even better returns year after year. To get free hands-on investing help, schedule an online training session. Learn more at investors.com/training. That's your IBD 2-Minute Tip. Thanks for watching.